But let's start with some and kick things off with Marianne Bartels, Chief Investment Strategist at Sanctuary Wealth. Marianne, great to kick things off with you.
It's great to be here.
All the data points, they're great. Markets tend to rally, best time of the year. I got to imagine for your clients at Sanctuary, it's nice. It's probably not the reason to invest, is it?
Well, the way we've been looking at the market now for a couple of years is that we're in the digital era. And the digital era means new innovation in technology. And this year we got AI. And I think it's taken a while for people to understand AI and what it means for the companies. We're talking about it in the build out, but what does it mean for earnings? And we finally are starting to learn what it means for earnings.
So, Mary, my question to you now is, what does it mean for earnings?
Well, this earnings season, which we're getting close to wrapping up, earnings are up about 15% year on year, 7% better than what analysts were forecasting. And the growth is really coming out of the tech companies. So there is a return on their investment. So semis are the leaders, and that's been a theme that we've had. If you study the cycle in technology, you get the new development in the chip, and then everything else, the hardware, the software comes after that. But like what Lisa Su said, is demand is insatiable because we're upgrading all of our technology. And this is going to take years. This is not something that's just going to happen 1 quarter, 2 quarters. I think this is a build out that we're going to see over the coming years.
And you referenced the AMD CEO. Listen, a lot of people have, when you say the words trickle-down economics, not you, but anybody, it has like this political reaction. People are like, oh, that's BS, doesn't work. But sounds like when it comes to AI, trickle-down economics is the thing, because somebody pays a couple $100 million, couple $100 billion for something. That goes to chips, which then goes to software, which then goes to like concrete and HVAC companies building the data centers. It sounds like it truly is kind of a trickle-down.
It is a trickle down, and the amount of money that's going into this build is really mind-blowing. There are estimates out there that the total build out for these data centers and AI and electricity, for the energy demand and everything, is going to be $7 trillion. Those are numbers I've never used in my entire career. So
that's almost double the federal budget of the United States. That's how big that is. That budget's like $4.5 trillion.
It's almost incomprehensible. But again, I think this happens in stages. But what I'm trying to tell our clients to focus on is that we're still in a secular bull market, meaning the trend in the market is higher. I'm very confident in my long-term targets for the S&P. We have 10,000 to 13,000 by the end of the decade.
Wow.
And
you have 7,000 by the end of this year.
Yes. So I think we can get to 7,000 by the end of this year. I think going into next year, I'm not sure it's going to be another 20% up year, but I do think the markets can go up. But I do think we'll have volatility from time to time, but to stay on the long-term target of 10,000 to 13,000.
This is important because one of the greatest, I don't want to say it's a lie, because that's the wrong word, but one of the greatest sort of misconceptions about the market is you hear this term that stocks double every 8 or 9 years, and that the historical average return is about an 8% gain for the S&P 500 every year. That's an average return. So you could have an up 40% year and then a down 5% year, and I'm making the numbers up, and then have an up 12% year and average 8%. Do you anticipate sort of a steady climb? Or like we've had in the past, I mean, there could be some gut-wrenching moments in the next few years. We had one back in April, by the way.
That was a bear market. It was 20%.
In like 3 weeks.
And that resets the cycle. I hear people saying that we're in year 3 of the bull market. No, we just reset it during Liberation Day.
Really? You believe that?
I believe we've started another cycle, and that this is year 1. But what I am seeing, Brian, is earlier in my career, we would get a 20 or 30% pullback every 4 years. That's happening more frequently.
It's happening faster, too.
It's a lot faster. And part of this is technology, how we're pricing things faster. So you're correct. We could get a 15, 20% pullback at any point in time. But as long as the solid fundamentals are in place, the markets are going higher. And now we also have the Fed cutting interest rates. I have never seen a market peak or have a major down cycle while the Fed was cutting interest rates.